Web3, I actually been trading a lot the past couple of weeks. I've been trading actually like several weeks ago. I was trading Celsius a lot, CELH. I was even speculating. I've been speculating on MobileEye, MBLY. I've been buying dividend kings like SCM, PSEC. I've been taking a little bit risk and NYCB. I've been taking a little risk on Zim. The difference between me and most furrows, they try to guarantee results or they don't let you know that they're taking a risk. I was trading a ton of times LNTH and now it's flying. I've been trying to trade Bill. I have one lot of Bill, one block of Bill. I've been trying and telling people this is why I want to buy Bill, because right now at $62, $63, Bill is trading it at like maybe 25, 26 PE, but they're growing more than 20%. It's growing like 25% on the sales. They're growing earnings at 50%. So this is like a value play when you look at the S&P 500. I've been trading a little bit of CAR. The numbers on CAR are a little bit off, but it makes sense. I mean, I have 2 blocks of CAR right now. CAR dropped under 100. Now it's up to 112. My average is about 118. I've been trading PSEC a lot lately because I actually reached out to the company. I actually spoke to a big person, an executive on the team. After I emailed the president, which I found the email from SEC document, they actually called me back and they went over on the phone with me everything that I was afraid of regarding PSEC. So the biggest loss, even though it's an unrealized loss, was PGX Holdings, which I just found out recently is creditrepair.com. So PSEC was the first lien holder. They loaned out almost $250 million to creditrepair.com, and now they've taken over the business. So that's a valuable property. The reason why the administrative costs at PSE went up a lot is because they took over PGX Holdings, which owns creditrepair.com. That was a major reason for the PSEC. But the great thing is when I spoke to PSEC is they've given all the checks. Right now it's just upside, it's the litigation costs. But they've basically taken the biggest hit that they can take right now. They didn't write it off completely on the books at Prospect Capital because now it's just upside. They do write things off the books and just liquidate a company. Rarely, but they do. But this one is a good one. So I've been trading that. Like I said, I'm trading Zim. Zim has earnings in 10 days. It's a little bit risky, but see what you can do is since January 1st and right now, you can see how much a container costs. So a container costs roughly right now, roughly around 3,000, but it stays steady over 2,500 since January 1st, since the war in Israel. So the earnings at Zim were horrible. They were horrible on the third quarter because Zim is going to report the fourth quarter in about 10 days. The third quarter, the containers were about 1,200. So the problem is when they report the fourth quarter, I don't know what the container was during the whole fourth quarter. I know rates increased in December, but I don't know the average. And it is my guesstimate that that Zim breaks even around 1,600 to 1,700 a cost average on a container. That I don't know, but I know the first quarter is going to be good because I can see what a container costs. So that's why I'm willing to take a bet, but I'm not taking a big bet. NYCB has a lot of exposure to commercial real estate. No one can tell you how bad that exposure is going to be. Nobody, because we don't know when a commercial real estate needs to readjust, because every 5 years or every couple of years, their interest rate adjusts and now rates are high. So when they adjust, can the owner of these places of this real estate afford to pay the higher rate? Do they have vacancies? Because this is a question I have on my properties. because all my properties are rental properties, it's commercial loan. It's commercial loan because they're all owned by LLCs and corporations, not by my personal name. And as such, because you don't want liability, as such, they're arms. They're adjustable rate mortgages. Luckily, I make sure there's enough cash flow that even if my rates adjust from 4.5% to 7.5%, I'm going to be able to pay the higher mortgage per month and I'll still be fine. But do other companies. But I am trading NYCB. I've been trading CELH, Celsius. I'm trying to trade Bill. I've been trading MobileEye a lot. I've been trading Secure U, symbol YOU. They've had good earnings. Sales growth was about 30 to 40%. They're slightly profitable now. I was trading HIMS, HIMS, before. It just shot through the moon, like 13, 14. When it was like 9 or 10, I was trading it. I was trading EZPW. It's a pawn company. Very profitable. Growth was 15 to 20% and had a PE ratio of like 10. Now it shot through the roof at 11. And so I'm trading. I finally got my first put last week. It's my first put all year. I haven't traded any puts since December 15th. I had Palantir expire December 15th, Roku expire December 15th, and Netflix. So these Carvana puts are the first put that I bought since December. And I don't mind buying them. They're May 17th with a 60 strike. So let's go. That's my trading plans. And, if you follow me on Reddit daily, I'll put in the trades. But I've been trading a lot, actually. Good luck.